Hello, everyone. Thanks for joining us. I'm Christopher Andrade, your host for another Bloockberg podcast today to talk about DATs, something that is generally buzzing around the CT, crypto, Twitter, and we brought three amazing guests to clarify all your questions around this topic. Uh, Let me do some introductions just to see the caliber we have today. Today, join us, we have Bill Decker. Bill Decker has been in the business world for decades. After a global career in sales and marketing, living in multiple countries for 18 years, he entered in crypto and Web3 about 10 years ago. Since then, he worked with layer one blockchains, led marketing and sales for company, helping Web2 firms transition to Web3, and is now focused on private equity funding next generation deals. Bill has written 4 books on blockchain, speaks internationally, and was recognized as a blockchain entrepreneur of the year in 2023. Welcome, Bill, for a show.
Thank you.
Next, we have Chris Galizio. Chris Galizio is the founder and portfolio manager of Focused Capital, a hedge fund based in Boston. Before that, he spent 11 years as a portfolio manager at Fidelity Institutional Asset Management, overseeing up to $7 billion in large cap growth assets, including a $1 billion mandate for Johnson family, the founders of Fidelity. He previously spent 13 years at Pioneer Investments, managing both the Pioneer Growth Shares Fund and the Pioneer Fundamental Growth Fund, and leading global tech and emerging markets research. Chris holds a BA in economics and government from Wesleyan University, an MBA from the University of Illinois, Go Fighting Illinois, and is a FA charter holder, the popular CFA. He believes capitalism ecosystem is now broken, dominated by passive flows and quant strategies. To explain this shift to everyday people, he produced Money Game, which is the first major finance film since The Big Short, which has already won 6 Best Film Awards in New York, Boston, and DC. Welcome to the show, Chris.
Thanks for having me, Christopher. Great to be here.
Amazing. So next is Thomas Jankovich. I hope that I pronounced that correctly. Thomas Jankovich is a South African American entrepreneur and former longtime consulting partner at Deloitte. He was the firm global leader for digital innovation, helping CEOs tackle old problems and create new growth strategies and cutting-edge technology. Thomas built and commercialized multiple ventures inside Deloitte, including launching their blockchain practice back in 2015. He later left the firm to build companies of his own. Today, he's a co-founder, investor, Make-A-Wish board member, and is preparing to take a DATCO, a DATCO public on the London market in Q1 next year. Thanks, Thomas, to join us as well.
Thank you. Great to be part of this amazing panel.
Amazing. So the very first question, in order to educate our audience, but not just our audience, myself as well, feel free for anyone that wants to start. What is a DAT and why there's such a buzz around this kind of companies?
Well, I don't mind jumping in first, and everyone else can tell me to keep quiet. But maybe before we, I think the first part of that question is important, and then I'll just park the second one. I think the first part is really about like, what are they and why do they exist? And really, it's a new era of finance. So Bitcoin has really just created an entirely new class of corporate finance where balance sheet actually becomes a performance engine, not just somewhere where you park cash. The journey of Bitcoin to where we are and now with the G's that we are pulling in the last few days, the current misconception is that Bitcoin is a currency. It's not. When you look at it as a store of value and you look at it as capital, that's when the whole world of what a digital asset treasury comes to life. And I think that, just as a watershed, and my colleagues on the panel can maybe add to that. But when you shift your mindset from a currency to essentially a capital instrument and a store of value and an engine for growth, it's really this is what's opened up the DATCO market.
Great. Chris, do you follow Thomas' thoughts about what is DAT and how
100%.
they can impact?
So I think these guys on the panel have a lot better understanding of digital asset products like that than I would. I'm more of a financial person on the equity side. And honestly, but to support what they're talking about, I wrote a white paper called the $340 trillion problem, which is referring to the debt that's unpayable, right? So our entire financial system is based on this belief that that debt is risk-free, right? That doesn't make any sense. I mean, unpayable debt is risk-free. So we've been indoctrinated in this system, believing that debt is risk-free, but we're seeing that the government is able to print money from thin air. Money supply is growing at least 8% a year. It's been more recently. Interest rates are only 4%, so you've got a negative interest rate, which is one of the points I try to make in the movie. When interest rates go negative, and I'm referring to real terms, all assets are worth infinite. The professor in the movie will say, my coffee is worth infinite, my desk is worth infinite, my whiteboard's worth infinite. Does that make sense? So you're living in a system that doesn't make sense, right? And so digital products like Bitcoin are an alternative to that. So you're basically, what I believe that you need to do is, I believe you're sitting in a sovereign debt crisis, right? That's what Money Game is. That's what that's what we're basically discussing in Money Game. I mean, at the end of the day, it's a real movie. It's rated R. So there's a storyline and all that. What we're really trying to show people is that nothing in financial markets makes sense. Once you realize that nothing makes sense, then you've got to find alternatives. And these guys on my panel will understand the basics of that a lot better than I would. But that's the overall environment that you're living in.
Great. And one more question, taking advantage of your experience at so many years at Fidelity, what is the thoughts of your colleagues around DATs and Bitcoin? Is the same as you, or do you think they're still very skeptical?
Right. So most people in markets still believe markets are efficient, right? The opening quote in Money Game is, the task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees. Because we're seeing things that don't make sense. GameStop, all these meme stocks going to trading at crazy valuations. Boeing Corp, which has lost 10 billion a year for the last 10 years. Since 2018, they lose 10 billion a year. If I asked a 10-year-old, how much would you pay to lose 10 billion a year? The 10-year-old would laugh at you and say zero. But financial professionals can't figure it out, right? So what they're doing is they're pointing. So in Money Game, we're talking about the biggest groupthink in financial markets history. Professor Gardner will raise the book, The Efficient Market Thesis. He laughs. He throws it in the trash. He says smart people thought the world was flat once too. So I believe what you're stuck in is this massive groupthink that markets are efficient. Not only are markets not efficient, they're broken, and the entire system is misallocating resources. And that's the point that I'm trying to drive home. And so where should an investor go? Digital assets, gold, real assets. And that's where I think we should be. That's where I think people should be investing in, and not play this money game, because I believe the whole system has shifted from an investing system to a financing system. Like, there is no cash flow return from 35% of U.S. companies are zombie corps that can't pay their interest. They're not making their money from selling planes or cars. Think of Tesla, right? Or software. They're making their money from selling shares to the passives. That's where they make money. So I believe the entire system is flipped on its head. And so you've got to be looking for alternatives to that. And that's why I think digital assets make sense, and real hard assets, where there's proof of work.
Amazing. Yeah, and I checked the trailer for Money Game. Awesome movie. Hope to watch one day. And Bill, passing the ball to you, what is your thoughts about digital asset treasuries? Companies, and I use also bullish around this kind of initiative, or you think maybe we should be cautious here?
Well, I first of all, Chris, if you're making another movie and you need a romantic male lead, and you can't get Brad Pitt, I am available. I charge very little. I like to get paid weekly, very weekly. I'm a former stand-up comic from New York.
Oh, that's perfect.
First of all, I think we need to define in simple terms, because I don't know who's listening to this, is what is a DAT? What is a DAT? A DAT is a treasury, a treasure chest. But instead of gold or silver, they're digital assets. One of the common ones might be Solana, which is a cryptocurrency. I don't know how sophisticated the audience is. So the idea that this company, and MicroStrategy is a great one. They do Bitcoin. They were doing a whole bunch of other stuff, and they said, we're done. We're just going to buy Bitcoin. We're done. And we'll make money that way. And there's a lot of copycats trying to do it in Ethereum and Solana, Ripple. So we'll buy the Ripple, and then you can buy our stock. So why does that matter? Why would anyone do that? Well, let's take my mom. My mom wants to go to Charles Schwab and buy stock. She does not want to get a wallet. She does not want to deal with Coinbase. She does not understand these 7 words or these 12 words or these 24 words, and she loses her password. She doesn't want to swap. And a digital asset treasury can do things that the token itself can't. For example, if I bought Soulmate, which is one of the DATs for Solana, they can stake it and pay that to me in dividends. So they can lend their tokens back to the network and pay me dividends. The other thing they can do is they can invest their Solana in projects which make money and pay me dividends. And I can get in and out, not 24/7 because they're traded on exchanges, but I can get out business days within 30 seconds. You're counting when you do a digital asset treasury, you're counting on something. You're counting on the person, if we're crypto relevant, the person running the DAT has cash to buy the token when it drops. Solana was over $200 a few weeks ago. Now it dropped to 134. I think it's heading to 140. Wouldn't it be great if Soulmate, who I invested in, had $1 billion in cash to buy low? That's the bet we're all making if we're crypto native. If we're crypto native, I'll just go to Coinbase. I'll buy all the Solana I want. No fund managers. The fees might be a little higher even on the Solana trade. So that's what we do. Am I bullish? Yes. Because digital asset treasuries have existed before crypto. I mean, one of my favorite ones was iTunes. That's a digital asset. It's a digital song. I can rent it or own it for 99 cents or $1.25, right? Now I can do iTunes. I can rent every song I want for $25 a month. They're holding it. They're not exclusively holding it, just like MicroStrategy isn't exclusively holding Bitcoin. That model, I think, is the future. And I think we're sitting in a place, like Chris mentioned, where kind of finance has to be restructured on its head.
100%. So look at the structures of markets in terms of bond markets, $340 trillion. The stock market is probably.
And I remember when that was a lot of money.
Well, the stock market is probably 100 trillion, right? All of crypto is at the most 4 trillion, right? The gold market is probably 20 trillion, right? So if you believe what I believe, that there's $340 trillion the entire system is based on, has to somehow flow from that 300 trillion, because if you believe that bonds are no longer payable, well, then they're worthless.
Mm-hmm.
Right? And so that money has to now squeeze into the stock market, into the gold market, into the $4 trillion crypto market, and the $1 trillion silver market. So I believe what you're sitting is a sovereign debt crisis, right? They're artificially here's the money game. As interest rates fall, asset prices rise, right? So Professor Gardner will say all of finance is based on one formula: the value of $1 paid annually. So $1 paid annually, all you need to know is the interest rate. If interest rates are 10%, it's 1 divided by 10%, it's $10. If If interest rates fall to 1%, now it's $100. During the movie, interest rates were 0.66, so it was $152. $152. Professor Gardner say, who here is willing to give me $152 if I give you $1 for the rest of your life? Dumbest kid in the class says, hell no, we'd all be dead by the time we broke even. Professor Gardner turns to him and says, correct. That's the point. So when you're looking at valuations in stocks, they don't make sense. Then he says when interest rates go negative, all assets are worth infinite, because as interest rates fall, asset prices rise. That's the money game. That's the Fed manipulating markets, because
Well,
they
the money,
can't themselves.
the market value of a stock makes absolutely no sense. There's so
Yes.
much sentiment involved.
Correct.
And what these children, and we're talking children, 16, 18, 19 years old, taught us about AMC stock, is they can put enough hype behind a stock, which really had very little value.
No
It
value.
has papers that lose money, right? I mean,
It's a zombie corp, right?
Yeah, and a zombie corp is, by the way, a great term. But they got sentiment going.
Mm.
And the stock was $80. If it's $80, it's $80. I go to Charles Schwab, that's what it costs.
So
These
These are the multiples, these are the multiples that are basically punted by the companies. And, Chris, your point, a lot of that stock market valuation is based on cash flows that currently cannot be explained. Mm-hmm. And so it's the promise of the future. It's the confidence, the sentiment in management's ability to create new growth based on their past performance. That is a problem, and I think ultimately what this comes back to from a crypto point of view and a digital asset treasury point of view is we have a collateral crisis. I live between real gold and digital gold, and we see sovereigns buying up bullion. We can see that on the COMEX exchange, gold is completely oversubscribed. So when someone actually wants that ounce, 100 other people are standing in line to get that ounce. And so if you believe from a crypto perspective, and again, we can probably get to it, the difference between the Bitcoin and the Solana and the others is, I'm a micro strategy follower in a big way, and this is the company that we're actually going to be taking public in the UK. Is Bitcoin is it is a finite reserve, right? It is there's a lot of scarcity. You got to take a view that the price is going to be going up forever, and if you take that view, just like physical gold as a store of value and the collateral of last resort, this is digital gold, and people are dying to get hold of it because they can prove the provenance. A company, I mean, the UK, I'm based in the US, but in the UK is still very nascent. A company went from a $4 million company to a 240 million pound company through an IPO because of the massive demand for access to this kind of financial product.
Mm-hmm. Well, exactly. I mean, look at Palantir, which has huge government contracts, unfortunately is owned by several people in our government. They are their shareholders, which is very, very sad. That's a whole other discussion. But the PE is like 657 to 1. It's just crazy.
Yeah, and the Citibank
is 10 to 1. Citibank's 12 to 1.
So when you talk about Palantir, you should notice this. So I don't believe anyone's pricing stocks anymore, and that's the biggest flag that's out there. 85% of the market now is passive and quant. The passives won not because they're smart, but because they have no. I'm sorry, the quants won, but not because they're smart, but because they have no morals. It's moral hazard, right? Mm-hmm. If anyone asked you here, Palantir is a perfect example. So at today's run, so last year the company's what, $480 billion company, something like that. Last year they made $1 billion in earnings, right? Last quarter they gave away $25 billion.
Yeah.
So why is this happening? And to me, it's because it's the ecosystem change. I believe what's happening is that Palantir is going up not because of fundamentals, but because they're issuing shares. Yes. Right. So the more you issue shares, the more the passives are forced to buy. They have no option. So they buy at the quarter because they have to match the index. So whenever they issue shares, it's actually causing demand because the ecosystem of capitalism is broken, which is what the movie is about, which is what my white paper is about. Issuing shares actually sends your market cap up at the quarter. So they issued this quarter, they issued $25 billion in shares, and their total profit over the last year was $1 billion. So in order to get back the money that you gave this quarter, it'll take you 25 years. So I think
executive bonuses are paid on that. That's why, because it's earnings per share. So they're
it's not even earnings per share. The more they issue shares, the more it forces the passive to buy. Because think about it, in the passive world, if you talk into Grok or ChatGPT and you say, if 100% of the world is passive, if I issued shares, shouldn't that send the market cap up? Because doesn't it force the passives to buy because they have to match the index? So I believe
that's where mNAV comes in, right? So, the passive in an index, the NAV of an index is the NAV of the collective companies in that index.
Yeah.
And that is kind of smoke and mirrors because it's only like 4% of the companies that are in that index are creating all of the value in that index.
Yeah,
so it's a big problem.
There's no way to get your money. Last quarter, they gave away $25 billion. Their profit the entire year was $1 billion. It's going to, just to get back how much they gave away last quarter, it'll take you 25 years. Forget about getting back all the value. There is no return from cash flow, right? Yeah. Which is the biggest. And by the way, the fact that the ecosystem is broken. So I don't believe that the reason MicroStrategy is going up is because of Bitcoin. I believe the reason MicroStrategy was going up is because they were issuing shares every quarter, which forces the passives to buy.
You said something interesting. You say cash flow, and that takes us back to DATs.
Yes.
Because I can invest in a DAT with a 9% dividend and get that cash flow.
I would just interrupt, sorry, Bill, just because there's some terms that you guys are already familiar with. I think Bill, Chris, and Thomas, and maybe an audience like me, maybe now recognize when Thomas said about mNAV, what is actually it is, and I would be nice explanation so I can learn as well.
These guys are too smart, Put me on with dumber people.
No, honestly, you guys, I'm glad I'm on with you guys because I'm a financial person. I don't know the specifics of what Christopher's asking. And so I'm glad I'm on with you guys because you understand that better than I do.
Yeah, I think the main objective is take all these very people with lots of accolades in the financial markets, but maybe with different perspectives. But Thomas, can you clarify a little bit?
Yeah, I mean,
the mNAV is important.
There's a lot of jargon terms and stuff, but actually this whole thing is pretty simple. So, we started and what Bill had mentioned around, his mother wants to go to Schwab to go and buy this. There's a bunch of reasons why you would buy shares in a digital asset treasury company versus you going and buying the coin or the crypto itself. So we've spoken about a few of those. The concept of mNAV is, and this is, as Chris mentioned, if the world is going passive and everything is going an index, then kind of AI wins. That's fine, and that just perpetuates, the broken markets, and the papering over the cracks. When it comes to mNAV, essentially what it is the market cap of a company divided by its net asset value, right? Okay. And so, if a company holds, say, 100 million in Bitcoin, and the market cap is 150 million, the mNAV is 1.5, which means investors are paying 50% premium above the actual crypto holdings. Right. So that is and how does it do that? It's because, well, if you held $100 in Bitcoin, it would be whatever that $100 is valued up or down or now, and then. And so, but what the digital asset treasury company can do to produce mNAV is financial engineering. Mm-hmm. They can innovate new products. They can do M&A. They can bundle.
They can market. They can put on a show. They can be in show business, which they all are, whether they like it or not. Right?
Yeah, and it gives a lot of flexibility. So we talk about Saylor a lot because he just expressed the playbook. He's like, hey guys, this is what I did. You can follow, don't follow.
Right.
And it's like the third or fourth most traded stock in the US right now. But the key to what mNAV gives, and again the sentiment or the confidence when this is on a stock exchange, is it gives transparent real-time valuation. It avoids distortions. There's a lot of time lag distortions, accounting treatment. Is it GAAP? We just see that that Basel is looking to redo the credit scoring mechanisms, and it also helps understand the investors understand the economic value versus the reported book value. So when you see that mNAV number, you can believe it more than when you look at, oh, this is our market cap and this is our earning per share and this is our ROA and our ROE. mNAV is like one number, and it's published and it's real time, and you can have the confidence in that.
Amazing. Yeah, and deep down, I understand and agree with Chris and Bill and you, Thomas. But let me play devil's advocate here for maybe a person that is a little bit more skeptical about the idea of digital asset treasuries. As you see, strategy stocks are not performing well compared to the past. And lots of people, I think Chris, in some degree, answer as well. It's not because Bitcoin, is maybe because it's MicroStrategy issuing more shares. Is that correct? I will leave to you first, Thomas, so we can pass to Chris and Bill as well. Why MicroStrategy, despite being the pioneer and doing a lot of things that the market see as correct, taking as a digital asset treasury, why they're performing, unfortunately, not great now?
Yeah, I mean, it all depends on how big is your magnifying glass. Like I could never be an FX trader and watch those graphs every single day. So Bitcoin in its life has had 15 drawdowns, and each of those drawdowns it has boomed back to record highs.
Yeah.
So this is another drawdown. The reason why this is so intense actually is a good thing, because the markets are deepening. Institutions have now started to take on Bitcoin.
Right.
So it's not just a bunch of moms and pops that are around the place that might be selling, and it's not about a few whales that are doing market manipulation. It's institutions that are revaluing their portfolios, and that's okay. Michael Saylor in 1 week went from just under 3% of holding the total Bitcoin to just under 4% in holding the total Bitcoin. Why? Because he issues shares at a low coupon over a long time. So he raises capital cheaply. He buys Bitcoin. That boosts his balance sheet. That gives him very strong negotiating power to borrow money to buy Bitcoin. That gives him more balance sheet, and you see how the flywheel works.
It's a flywheel, yeah. He's borrowing at 10 and he's selling and he's holding it to go up 30. I mean, that's really what's happening.
So everyone should notice where MicroStrategy is getting their money to buy Bitcoin. They're issuing shares. Like, look at their main business. Their business itself is a zombie corp, right? It's got like $780 million in revenue, but profits are negative.
Yeah.
So where in the first place did they get their money? They get their money from selling shares, right? So by the way, why would you? At one point, I think, and you guys would know this better than me because I'm sure you follow it a lot closer. I'm not really a Bitcoin. I'm not really a direct Bitcoin. I'm a bigger, more asset management type of person that looks at all markets. I mean, why would anyone pay? I think at one point you were paying 2x for twice as much as the amount of Bitcoin that Saylor has on the balance sheet. Why wouldn't you just go buy Bitcoin directly?
Well, so the way that, again, not to overquote Saylor, but if you want 10x, buy Bitcoin. If you want 100x, borrow money to buy Bitcoin.
I see.
If you want 1000x, use someone else's money to buy Bitcoin.
Right.
And when in the traditional way of, well, he's issuing shares and therefore he's diluting the equity, that's not true with a digital asset treasury company, because what he's doing is he's buying Bitcoin. So the metric for him is both mNAV and Bitcoin per share, not earnings per share, because that you can move the deck chairs around on the Titanic just so that you can get a big bonus. The value appreciation is through Bitcoin per share and over time. So you take, and again, coming back to your point, Chris, around, well, now MicroStrategy is not doing so well. Well, just like any crypto, when in doubt, zoom out. You've got to have a 4-year view, and you've got to see where this is, where this is going.
Hey, that rhymes. So you asked earlier, Christopher, why it's going down. What's precipitating this? So I've been in the space 12 years, and when we got in, Bitcoin was the opposite of the stock market. The market would go down, the crypto would go up. It was a degen. It was faith. It was, this is a new system. This is what we've got to do. Now what's happened is all these institutions, as you other gentlemen have mentioned, are into this, right? You've got companies that have no business being in this, like Ford Motor Company with $5 billion of Bitcoin on its balance sheet.
Wow.
So guess what happens? We've got a president who tariffs everybody, changes his mind day by day, locks up scientists that are trying to come into the country to help cure AIDS. Olympics isn't going to be here. Travel is down. No one wants to come here. We're on a most wanted country status. And guess what? Our stocks go down. And those stocks hold these assets. So if Ford goes down, it kind of takes Bitcoin a little bit with it. We've lost the decentralized. The other thing is, another side of decentralization is because we have players like MicroStrategy who own so much, it takes some of the faith away. If he dumps his 4% tomorrow, the market crashes, right? Period. Even though he's only got 4%, the other guys follow. Oh, if he's getting out, I'm getting out. He knows something. He's smarter than me. So it is that merge of TradFi and DeFi and crypto that has actually hurt the crypto industry.
So in the end of the day, the institutional adoption is not that good. Is that what you're saying?
I'm saying it confuses the waters now, because if Amazon owns a bunch of Bitcoin and Amazon stock halves, Bitcoin will follow.
I think it's a great point.
Well, I mean, it's a wonderful time to be alive, because where there's change, there's opportunity.
Yes.
And so the point around whether MicroStrategy would dump 4% of its Bitcoin, which is 100% of its business model,
right?
Is a bit like Henry Ford saying, "Oh, I've changed my mind. I don't think I'm going to go with this anymore." So the likelihood of that is pretty slim. But like all questions are valid in this space. I think when we talk about whether it's Amazon, there's 113 companies that own Bitcoin as part of their treasury strategies.
Yes.
The point around institutional investment, Christopher, is in the US at least, there's something called SEC 40, which really limits your ability to invest in equities directly, and especially crypto. So institutions, if they want access to volatility, then they have to do it via a different wrapper.
Yes.
And this is what the wrapper is, and the wrapper can be pointed directly to a cryptographic key of a digital asset. It's not oversubscribed. Where that Bitcoin is where that Bitcoin is, and it's validated on the blockchain. It can't be hijacked. It can't be copied. It might be sequestrated by the government, but the asset is the asset. And I come back to my points around collateral. You are in the game. You are able to issue credit, to secure debt, because you have collateral, and that's how you can create leverage and gear your business to grow.
So
Yeah.
it's very interesting talking to you guys because you're very product and ecosystem focused, and I'm 100% market focused, which makes us a great team, by the way. That's the wisdom of teams. One thing we haven't talked about is the availability of DATs in retirement vehicles, which that's the biggest wealth transfer we're ever going to see. $63 trillion is going to move in the next 5 years from, say, my mom to me. Now, she's got a little short of 63 trillion, so I'll probably get about $63. But she can go to her IRA and buy Soulmate or Sharp or SBET or any of these things, FGNXP, without having to start a crypto IRA account. There are some. We don't know them well. It's not like Fidelity, which we know, right? It's not like Schwab, which we know. It's, I Trust Capital. I use them, but no one knows about them. But Fidelity's done a great job. The other thing, I actually had dinner with the CFO of Fidelity some time ago. She told me her customer is 50 years old, and she needs her customer to be 25. And she said, I could do it with clowns jumping on the screen and TikTok videos and people pouring soda pop on their head, or I can get into crypto, right? So
who was the CFO there?
The CFO then was Jen Miller. This was maybe 6 years ago.
Okay. I don't think I know her.
Yep. Yeah.
Okay.
I was literally scared talking to her.
Of course. Of course.
I mean, I grew up in New York City, and she was the quintessential New York CFO. Like,
I used to run into Ned Johnson, right? He's the founder. I was running money for them, and so we actually meet with Ned. He's a legend, like he's beyond a legend, right? To meet with him personally and discuss investing is overwhelming because he's just such a bright guy. Even at his advanced age, he's a super bright guy.
Yeah,
but just think of the era that we're in with kind of going to go sharp left turn and just say we're also in the era of AI and crypto,
right?
And what that's doing is it's democratizing knowledge and to some degree wisdom. So you can take a photograph of a candlestick chart, of an index or an equity, and you can put it into ChatGPT and say, what should my next move be?
Yeah.
Now, you would need to normally be a CFA, have studied and really killed yourself through exams to be able to actually make those calls. Now you can cut and paste and put it into ChatGPT.
It's brilliant.
The days of pricing analyst reports saying, well, the wisdom of bank X or Y, they've got the best analysts and this is where I go and get my knowledge. That knowledge is now everywhere. And you also have the wisdom of the crowd. And so people are making up their minds themselves. And then they are able to execute on those decisions themselves. So not only is the crypto decentralizing, the AI is now democratizing. And that is a massive, it's just putting fuel to the flame. It's a massive, massive, massive catalyst for growth. And I think this is, it's a super, super exciting time in the future.
Oh, especially I can round up your opinions that if you've posted them, if you've dared to speak publicly, including on this podcast, about your thoughts, ChatGPT, I want to know what Thomas thinks. I want to know what Fidelity thinks, Morningstar, and Thomas, right? That's it. And I trust Thomas. I want to follow him, and I don't have to hunt and peck.
As a joke, you should try you should get ChatGPT to roast me. Say roast me on ChatGPT. It's funny.
Oh, there's plenty of material for me. I mean,
plenty out from there for me too.
Sorry, Chris, I stepped on you.
No worries. One of the best plays on. So think about if you believe that the entire system is based on $340 trillion of debt that's unpayable, or in the U.S. it's 38 trillion, and now we're having AI, right? AI stepping into that. So we all know that AI is going to take away jobs, right? It's a certainty that AI will take away jobs. Okay, who pays back the $38 trillion in debt? If nobody has jobs, who pays it back? And the answer is you can't pay it back without a job, right? So the best play on AI isn't actually AI, which valuations are crazy. It's digital assets. Mm-hmm. It's gold. It's silver. It's like that's the best play because the debt. If you believe the debt's not payable today, and then we have unemployment because of AI. it's going to be even more unpayable.
Yeah,
So again, I think that $340 trillion has to flow into the stock market, which is a massive bubble and doesn't make sense. Gold is only 20 trillion, and digital assets is only 4 trillion. So you've got to have that 340 flow into 4, and it's the upside is impossible to measure. I mean, we shouldn't even be measuring things in terms of in dollar terms. Think of think about the only reason you're measuring thing in dollars terms is because the US dollar is the global reserve currency. Right? Correct. That's the point. Right? So if the US loses global reserve status, then the value of the dollar falls to zero. Now, there's been 52 countries in history with a debt to GDP of 130%. 51 of them have defaulted or hyperinflated. That one that didn't was Japan, which, by the way, is now hyperinflating. So there's 100% certainty that the currency is going to crash. If the currency crashes, then digital assets go to infinite. Gold goes to infinite. Try to value gold today in Weimar mark terms. What's the value? It's infinite because the currency crashed. I can't believe the entire world has shifted. Dollars shouldn't even be the denominator. The denominator should be either Bitcoin or gold. Take your pick.
Here's an interesting line on gold. The price of gold has not changed since biblical times. You could buy a cow for an ounce of gold, and you can buy a cow for an ounce of gold now.
Correct. As a matter of fact, if you look at gold, if you look at the S&P 500 versus gold, just put it in gold terms, it hasn't gone up since 1960.
Yeah.
So gold has actually beaten the S&P since 1960. So this whole thing that we're living is a debt mirage. There's no productivity. There's no productivity in the market. We're pouring money into zombie corps, which don't make any sense. Right? The whole system.
I'm gonna need a stiff drink after speaking to you on this.
I know. I want my mommy, Chris.
Yeah, exactly. I've got a rocking in the
another
corner.
Party
shaking.
I'm not inviting you to.
Right.
Yeah. But
the digital asset owner, those prices should go for the moon. That's a positive.
So that's the point. In the, I'm not the macroeconomist, but the trying to devalue the dollar and then give incentive for other currencies to not use dollar to settle transactions is just the scariest thing. I come from South Africa. It was still trying to hang in there as a first world economy in a third world country. The country next door to us is Zimbabwe, and they used to have 1-for-1 Zimbabwean dollar for US dollar. Could interchange them, gas stations, etc. They ended up printing $10 trillion notes.
Correct.
$10 trillion in one note.
Yeah.
Mugabe really did a great job on that. Currency in history.
Yeah.
To believe that the U.S. can't happen to the U.S. doesn't make sense because
it happened to the guilder. The Dutch guilder was the reserve currency a couple hundred years ago.
Right.
But it sounds like we big fans for crypto basically being capital and not currency. And I think that's my opening point was there is a rush and a massive demand for real world collateral that is accepted as real world collateral.
Yeah.
That's why, again, the gold price is going like crazy, and that's why Bitcoin and crypto will continue to rise and rise.
Yeah, I would make a question for you that maybe Bill thinks differently as well. I'm not sure if you're a Bitcoin maximalist. And one of the things a lot of people are thinking about is that DATs would not focus on Bitcoin, for example, DAT of Solana or any so-called altcoin. It works because it kind of presents a bigger volatility compared to Bitcoin. What's your thoughts about that? And I would pass to Bill to also
say that again one more time.
Yeah, digital asset treasuries. Do they work with Solana, other altcoins instead of just BTC?
Oh yeah, absolutely. I mean, I don't know if Thomas is launching one in Solana or not.
No, we're doing Bitcoin, and we're doing something else as part of it, which is super, super exciting.
Oh, I got to talk to you about it sometime.
Yeah.
So do they work as well? Again, there's the ease of buying, right? If the fund manager, and it all comes down to that. I mean, a DAT is no different than any other kind of fund, right? Some guy's running a fund and taking a couple of percent, and you're hoping to high hopes that this person knows what on earth they're doing, that they're keeping a reserve of cash, that they're purchasing low, that they're selling high, that they're distributing back to the users. The number one marketing mistake, and I'd love to talk to you about it, Thomas. When I look at a DAT fund, I don't see an explanation of the management team knowing what on earth they're doing. I hear they came from Fidelity. Doesn't help me. Got an MBA from Wharton. Doesn't help me, right? Did 4 startups. Doesn't help me, all right? And they have to use it in simple terms. My life mission. I mean, I'm holding this up. I'll send this to you guys. This is a children's book I wrote on blockchain.
And that's awesome.
Trying to make it simple as simple can be.
Brilliant.
If the fund manager, here's a blockchain for schmucks. I'll send you all of these to you.
Love it.
I couldn't do for dummies, so I did for schmucks.
Love it.
And I also have a Yiddish dictionary in the back. That'll
honestly, the Fidelity fund managers and all those people that are stuck in the groupthink that believing that markets are efficient.
Yeah, well, you're right. You're absolutely right.
So you can ask a 22-year-old who just graduated from whatever, and have them look at the cash flows of a company like Boeing. They're going to look at it and they're going to say that's worthless. Everyone's conflating valuation with value. Those are two different things. Like the valuation of Boeing is 170 billion. The value is 0. And it's clear. I mean, they lose 10 billion a year since 2018. Like nobody's projecting the future. There is no projections. As a matter of fact, notice that Boeing's actually going up. Why? Because they're issuing shares, right? Everything's working opposite of fundamentals. By the way, if you buy back shares, if you pay massive dividends, today is a great example. A company like Zim just recorded. So Zim Corp is it's probably the 4th biggest shipping company in the world. Over the last 5 years, they've earned 14 billion in free cash flow. It trades at 1.9 billion. Well, why? Because they've been paying massive dividends. When you pay a massive dividend, it becomes at the X date, it becomes smaller in the index. The index is a force to sell. So over the last year, it earned $19. It trades at 17. It trades at less than 1 times earnings. So and it's free cash flow every quarter, right? And the financial the guy, when you ask the people at Fidelity, they're going to come up with some reason where that makes sense, that they believe makes sense. Well, it must be a value trap, right? No, it really is earning this much money, and it really is earning. And the opposite is true with the Palantirs or the companies on the other side. I think things are completely disconnected from fundamentals. So the thing that's funny is you're going to have that 22-year-old graduate from college, and they're going to say 2 + 2 is 4, and they're going to go to their manager and say, hey, 2 + 2 is 4, that you should sell this. And the manager is going to say, no, you don't understand. You haven't worked in markets. And then they're going to gaslight them to believe that 2 + 2 = 4,274. Isn't that amazing? So actually, the people at Fidelity, I would argue, are the people who don't understand what they're talking about. So when you go to the experts, they still believe markets are efficient.
Yeah.
So I mean, the explanation of so that point around giving dividends because you don't know what to do with the amazing cash that you were able to generate is really a slight on the management team, which is they don't know how to deploy that capital, and therefore will give it back to you and hope that you will be able to deploy that capital better than they can. That is shocking because they have foundational businesses that they can grow, that they can invest. And this is the beauty of any digital asset strategy, which is if I generate, whether it's the operating company, which is preferable because it's a hedge against the ultimate downside. If I can generate leverage upon leverage within my treasury, so my treasury becomes the growth engine, not my marketing team, not my product team, and I generate new cash flow, and I reinvest that in the thing that helps me generate that new cash flow. Isn't that better than giving away a dividend to say, mea culpa, wave the white flag, I don't know what to do with all of this money?
Mm-hmm.
Yeah, and Thomas, do you see? I think we left this question unanswered. Why not have a DAT with Solana and other tokens instead of BTC? I think you're more prone to BTC, right?
It's a philosophy on the different protocols, right? So, 113 companies, that's like 80% hold Bitcoin. Solana, about 10 companies hold that. I'm a big fan of Solana. I think it's undervalued. I think it is phenomenal in terms of its smart contract capabilities. Uh, it is part of the infrastructure play
Yes.
that you are then able to generate yield through staking. The model is just different.
Mhm.
It's not the value appreciation play
Right.
like Bitcoin, which has a finite minting ability. So if you take a Solana, if you take any of the Ethereum derivatives, those are incredibly powerful protocols that allow for DeFi, decentralized finance, so that that information in a transaction can be carried with the transaction and the value of the money. It's like
Right.
amazing. It's
But,
it's it's like the
but
internet
there's
gets
another
carried in
piece.
each thing.
We can't get to the owner of Bitcoin. We can't get to the management team of Bitcoin, but we can at Solana. We can at Ethereum. There's a neck to hold. And what that means is people who want to build applications are more prone to do it on a Solana, on an Ethereum, than on a Bitcoin, which is mysterious Japanese Satoshi Nakamura that no one's ever seen or heard of, and supposedly owns 4%. No one knows who he is. And does he exist? Is he just an idea? It's hard for a company like Walmart to say, we're going to put an inventory supply chain on that tech. They're much more comfortable meeting with executives at Ethereum and saying, yeah, we can build this. This is how you do it. Help us integrate it. Ethereum has whole companies.
But remember what you just said, Bill, is incorporating it as part of their infrastructure.
Yes.
As part of the scaffold of the business model that allows them to get something and to get it to a customer as cheaply, as quickly as possible, without having too much overhead that has to do reconciliations. When I lived in London, and when I used to have brown hair, working at Merrill Lynch,
Hang on.
I did
We have to stop.
reconciliations
This
in
is
the
the man
treasury.
complaining to bald people about his hair color. My heart is bleeding, Thomas. I'll take it
I'm being
brown. I'll
ageist.
take it purple.
I'm being
Oh, the
ageist.
poor man.
But I sat there with these dot matrix printouts and a ruler. That was the technology I had. I had a
Yeah.
ruler, and I had to do the end of day settlements with Nostro and Vostro. And that's in one lifetime. Like, you try and explain that to someone now. With the Solana and with the Ethereum protocols, that just goes away. Like,
Yeah.
all of these business processes
Correct.
disappear. So
Yes.
having a different protocol as part of your digital asset treasury is really a different philosophy on how you want to construct your business model, or how you actually want to construct your business. For me, the digital asset treasury business takes over from the business that spawned it. And that's what we're doing, is we're taking an agency that is going to become an AI agency, that is a digital asset treasury agency, and then something else which is pretty sexy. And then but it changes what the priority of the business is, regardless of the infrastructure of the operating business.
Amazing. Yeah, and we are going to the final part of our conversation. Exciting conversation. I learned a lot. Let's make some final remarks about the topic. I will start with you, Chris Galizio. In the long run, the long term, do you see DAT surviving despite all this volatility, all these ups and downs of crypto industry, or do you think, unfortunately, this kind of strategy will not have
Love,
a lot
I
of life?
absolutely love that question. So there's a chart from Mermacan Capital, which shows you gold during Weimar, right? And if you leverage, and what it was gold would, and I'm thinking about today's gold is actually digital. So what you see is you see the price go up and it's a massive strike collapse. Then the price goes up, then a massive collapse. If you leveraged your gold at that point, there were 5 times you could have lost all your money during the biggest sovereign debt crisis in history. So if you leverage these things, it can get dangerous because you're forced to sell at the wrong time.
Yes.
And so I would expect the volatility, right? Just look at the chart. It's like up, down, because what's happening is the government itself is manipulating markets, right? That was what was happening back from 1921 to 1924 during Weimar, right? So yes, you're going to have volatility along the way, but at the end, it ends up trading at infinite in dollar terms. That's where I think we're heading.
Bill, what's your final remarks about DAT kind of companies? They have a long life? Do they have?
Okay, again, DATs, digital treasuries have existed forever. Now they're just using digital assets, right? There's a whole bunch of gold stocks where you can buy the stock and you don't have the gold in your hand, or I can walk into a jewelry store and give me a piece of gold. I do see the long-term success, but they're going to have to come from the TradFi people and not the degens. The degens are turning people off. You know, guys who are with the T-shirts and Metallica and the bone in their nose and they didn't shave. And that's not going to ensure the trust my mom needs to put her money in, to put her 10 grand in. So I do see it happening. And I think that they have a lot of flexibility in terms of deals they can stake, deals they can get involved in. On a personal note, by the way, I did put my email up on the chat. I really enjoyed talking to you, gentlemen. I put 2 of my books up there. I'd love to talk about working together. Ik kan net spreken Afrikaans.
Ja, ik verstaan.
The way you should think about it is, why would you, if you're talking about cash, why would you ever save something that can be printed from thin air?
Yeah.
So why would anyone save? So why would you save cash? You know it's being printed from thin air. So if you're going to store your assets, store it in something that that is finite, whether gold or silver or digital assets, but don't store it in cash.
And universally accepted. And the problem with walking around with gold is that you're walking around with gold. It's heavy, and people bang you on the head and take it from you.
You know, I do want to digress for a second. I'm sorry to take the floor. I worked for a layer 1 blockchain as a CMO for quite a while. And I said, why don't we get into the remittance business? Why don't we have Mexican Americans sending money home to Mexico? And they said, well, nobody takes our token. And I said, they will if you buy the largest supermarket chain and you've got the money to do it. Mama doesn't have a bank account. The son does not want to pay 6%, 8%, and mom's got one of these. Can't she walk in here and flash and buy her groceries? And $8 out of $100 is significant in Mexico. It's a bag of groceries. So I'm sorry to digress.
No, I mean, that's why I'm in my car outside a stablecoin conference in Miami. But my closing thought and the point is the volatility in the crypto markets, Bitcoin specifically, that is not a bug. That is a feature. There are players across markets that have different risk appetites. And having the ability to amplify that delta is a way that a lot of money is made and a lot of money is lost. And the smart ones, and this is what the hedge funds do, is you want to win more than you lose. And I think where we are is still very, very early. And I think the digital asset treasury companies that are going to survive and thrive are the ones with strong operational businesses that generate cash flow, not just like shell companies, and that the ones that have conservative debt structures without margin calls, because then the game is up. Proven track records through full market cycles. Like this is not kind of one and done, pump and dump. This is kind of a grown up, responsible business model, and then also being transparent, being shareholder aligned, and having management that are the real deal, and not a bunch of bros or girls that
very well said. Very well said.
This is what we're going to do and be in and out very quickly.
No bros.
Amazing.
I'm too old for bro. I'm a dad,
I will talk to editorial to try to see if we can have the conversation was so great that we can maybe look for a fixed, I would say a permanently panel. I mean, great conversation. I just want to say thanks to you, Chris, Thomas, Bill, for the accept the invitation to talk about something so new that is making so much buzz around the internet and crypto Twitter and stocks, stock market. And I think this was a great conversation. You can check this conversation on YouTube, on Bloockberg.com, and our Twitter as well. Subscribe on our newsletter to check data and real-time data about the market, about the top winners and losers of the market. And I see you all next time. Thanks, guys.
Thanks. This was fun.
Be in
See you
touch,
later.
gentlemen, please.
Bye.